There are infrastructure projects that solve obvious problems. And then there are projects that seem to have been built for crises the world hadn't faced yet. This is one of them, a $3.3 billion pipeline stretching 406 kilometers across deserts and mountains, built not to produce more oil, but to bypass one of the most strategically important and potentially vulnerable waterways in global energy trade. For years, the project looked excessive, an expensive solution to a problem that hadn't happened. Then tankers were attacked. Energy infrastructure came under fire, and one narrow stretch of water suddenly became one of the world's biggest strategic risks. Almost overnight, the pipeline transformed from an overlooked mega-project into one of the UAE's most valuable national assets. But that raises an even bigger question. How did the UAE see the danger years before everyone else? The answer begins long before the first drone attack, long before missiles struck oil facilities, and long before the world began questioning whether one narrow waterway could disrupt the global economy. Because this story isn't really about a pipeline, it's about a hidden weakness that existed inside one of the world's largest oil-exporting nations for decades. For years, the Abu Dhabi National Oil Company expanded production across Abu Dhabi. New oil fields came online, processing facilities grew larger, export terminals handled increasing volumes of crude. On paper, every investment made the system stronger. But beneath that success was a structural vulnerability almost nobody talked about. Nearly every barrel of oil followed the same direction. Different reservoirs, different gathering systems, different processing plants. Yet almost all of them depended on a single export corridor leading toward the Persian Gulf. From there, tankers had only one practical exit, the Strait of Hormuz. Although only a narrow stretch of water, it carries roughly 1/5 of the world's seaborne oil trade. Every disruption echoes far beyond the Gulf. Insurance premiums climb, energy prices react, financial markets respond. Governments begin calculating strategic risk instead of commercial opportunity. For decades, none of this seemed urgent. Shipping remained uninterrupted. Energy demand kept growing. The system appeared efficient. But strategic planners inside Abu Dhabi weren't asking whether the network worked today. They were asking a much harder question. What happens if one day it doesn't? That single question changed everything. Imagine an entire country's exports depending on one highway. Every truck, every shipment, every delivery. As long as traffic keeps moving, the system appears flawless. But block that highway for even a short time, and everything behind it begins to back up. The UAE faced the same problem. It wasn't running out of oil. It wasn't running out of customers. It was running out of alternatives. By the late 2000s, Abu Dhabi was producing around 2.5 million barrels of crude oil every day, with plans to increase production even further. The reservoirs were ready. The export system was not. Every new expansion pushed more crude toward the same coastline. Every investment increased dependence on the same maritime route. The country had built an incredibly efficient energy network. But efficiency without redundancy can become vulnerability. Instead of asking how to produce more oil, engineers began asking something far more ambitious. What if the oil never had to pass through the Strait of Hormuz at all? The proposal sounded almost impossible. Build a massive pipeline across the country. Cross hundreds of kilometers of open desert. Cut through the rugged Hajar Mountains. Construct an entirely new export terminal on the opposite coast. Spend billions of dollars without producing a single additional barrel of oil. To many observers, the project made little economic sense. But it wasn't designed to maximize production. It was designed to maximize resilience. Because the true value of strategic infrastructure isn't measured during periods of stability. It's measured on the day stability disappears. The plan would begin at Habshan, one of Abu Dhabi's largest oil-gathering hubs. From there, crude oil would travel underground across the UAE to Fujairah on the Gulf of Oman. For the first time, tankers could load outside the Persian Gulf and sail directly into the Arabian Sea without passing through the Strait of Hormuz. It looked like a bold solution on paper. Building it would prove far more difficult. The desert would test the machinery. The Hajar Mountains would test the engineers. And before the first barrel of oil could flow, the UAE would have to overcome one of the most demanding infrastructure challenges in the region's history. On a map, the solution looked surprisingly simple. Draw a line from Habshan to Fujairah, connect the oil fields to a new coastline, bypass the Strait of Hormuz. Problem solved. But maps don't show what engineers see. They don't show shifting desert terrain, unforgiving heat, or mountain ranges that refuse to move. Turning a strategic idea into a functioning energy corridor would become one of the most ambitious infrastructure projects ever attempted in the Gulf. The journey began at Habshan, one of Abu Dhabi's largest oil-gathering hubs. Every day, crude from giant fields converged there before beginning its journey toward export terminals on the Persian Gulf. The new pipeline would change that direction entirely. Instead of heading north, the oil would travel east, across an entire country. The route stretched more than 406 kilometers. It crossed vast deserts where temperatures regularly climbed above 45 degrees Celsius. Construction crews worked in harsh conditions, transporting thousands of steel pipe sections across remote terrain where supporting infrastructure was often limited. Yet the desert wasn't the project's greatest challenge. The Hajar Mountains were. From the air, they appear as a rugged wall separating the UAE's interior from the Gulf of Oman. On the ground, they presented engineers with steep gradients, solid rock, and constantly changing terrain. The shortest route was no longer the smartest one. Every additional bend increased hydraulic resistance. Every elevation change affected pressure. Every kilometer demanded careful engineering rather than simple excavation. Then there was another challenge most people never consider. Moving crude oil isn't like moving water. Oil is heavier, thicker, and over long distances, pressure gradually disappears. Imagine trying to push water through a garden hose stretching hundreds of kilometers. Eventually, the flow slows. Without additional force, it stops. A pipeline carrying millions of barrels every day faces the same fundamental problem. The solution came in the form of powerful pump stations positioned along the route. Each station acted like a relay runner. Before pressure dropped too far, the next station took over, pushing the crude forward toward the coast. Together, they transformed hundreds of kilometers of steel into one continuous system capable of operating around the clock. The pipeline itself measured 48 inches in diameter, roughly 1.2 meters wide, large enough for an adult to crawl through. Every weld had to withstand enormous pressure. Every valve had to operate with precision. A single weak connection could compromise the entire system. Yet moving oil across the country solved only half the problem. A pipeline can transport crude. It cannot export it. When the oil finally reached Fujairah, there was almost no infrastructure capable of handling millions of barrels destined for global markets. An entirely new export terminal had to be built from the ground up. The first structures weren't docks. They were massive storage tanks. Think of them as giant batteries for crude oil. Oil fields operate continuously. Tankers do not arrive continuously. Storage bridges that gap, allowing production to continue while the terminal waits for the next vessel. Only then could the crude move toward specialized marine loading facilities designed for very large crude carriers, or VLCCs. These are among the largest commercial ships ever built. A single voyage can carry around 2 million barrels of oil. Loading one is a carefully controlled engineering operation. Pressure, temperature, flow rate, and safety systems must all remain within strict limits. By the time construction neared completion, the UAE had done far more than build a pipeline. It had created an entirely new export corridor on the opposite side of the country. For the first time in its history, a significant share of its crude could reach the open ocean without entering the Persian Gulf. It was an extraordinary engineering achievement, but almost no one outside the energy industry noticed. Many still viewed the project as an expensive piece of insurance. They believed the old export routes were sufficient. That assumption would not survive the decade, because within a few years, events across the Middle East would begin proving exactly why the UAE had spent billions preparing for a crisis that most of the world never saw coming. The Fujairah pipeline solved one of the UAE's biggest strategic vulnerabilities, but it also revealed a much larger geopolitical reality. In the 21st century, energy security is no longer defined only by how much oil a country produces. It's increasingly defined by how many ways that oil can reach global markets. That lesson didn't go unnoticed. Thousands of kilometers away, policymakers in Beijing were paying close attention. Every day, China imports more than 11 million barrels of crude oil. Much of that oil comes from the Middle East. For decades, those shipments shared the same uncomfortable reality. Before reaching the Indian Ocean, many had to pass through the Strait of Hormuz. China could purchase the oil. It could finance overseas energy projects. It could build strategic partnerships across the Gulf. But it could not control the route that carried much of its energy supply. That dependence has long shaped Chinese strategic thinking. Every tanker delayed, every regional conflict, every rise in geopolitical tension, all represented potential risks to the world's second-largest economy. The Fujairah pipeline did not eliminate those risks, but it reduced one of them. Tankers loading at Fujairah could leave directly through the Gulf of Oman without first transiting the Strait of Hormuz. For importers across Asia, that meant greater flexibility. For shipping companies, it meant another loading option. For energy traders, it reduced one important point of uncertainty. Yet even that wasn't the end of the journey. Every tanker leaving Fujairah still had to cross the Indian Ocean, and eventually, many would arrive at another narrow maritime corridor, the Strait of Malacca, one of the busiest shipping lanes on Earth, a vital artery connecting the Indian Ocean with East Asia. For Beijing, bypassing Hormuz solved one strategic problem, but another remained. Chinese planners have long referred to this challenge as the Malacca Dilemma. The concern is simple. If too much of a nation's energy supply depends on one vulnerable route, that route becomes a strategic pressure point during periods of crisis. The response has not been a single mega project. It has been an entire network of alternatives: oil and gas pipelines across Myanmar, transport corridors through Pakistan, rail connections reaching Central Asia, port investments across the Indian Ocean. Different countries, different infrastructure. One common objective: reduce dependence on any single choke point. The UAE reached a remarkably similar conclusion. Its pipeline did not replace the Strait of Hormuz. It gave the country another option. And in geopolitics, options are power. That is why ADNOC continued expanding Fujairah with additional storage capacity, new marine terminals, and plans for a parallel pipeline. The goal wasn't simply moving more oil. It was ensuring that exports could continue under a much wider range of conditions. This reflects a broader shift in global strategy. For much of the 20th century, governments measured energy security by asking one question: how much oil do we have? Today, another question has become just as important. If one route fails, how many others remain? That shift is transforming infrastructure around the world. Pipelines are no longer just engineering projects. Storage terminals are no longer just industrial facilities. Shipping corridors are no longer merely commercial routes. Together, they form strategic networks capable of influencing diplomacy, military planning, and economic resilience. Looking back, the Habshan-Fujairah pipeline was never simply about transporting crude oil across 406 kilometers. It represented a new way of thinking. Instead of reacting to crises after they occur, build resilience before they begin. That philosophy is now spreading far beyond the Gulf. As geopolitical competition intensifies, countries are investing in redundant pipelines, expanded ports, strategic storage, rail corridors, and alternative maritime routes. Not because existing systems have already failed, but because they may fail one day. And those who prepare first usually recover fastest. The future of global energy will not belong only to the countries with the largest oil reserves, nor only to those producing the most barrels. It will belong to the nations that can keep energy moving when the world becomes uncertain. Because in geopolitics, the most valuable resource isn't always oil. Sometimes, it's having another way out. By 2012, construction was finally complete. More than 406 kilometers of steel connected Habshan to Fujairah. But before a single commercial shipment could leave the terminal, engineers faced one final challenge. Would hundreds of kilometers of pumps, valves, storage tanks, and control systems operate as one seamless network? Every section was tested. Pressure was increased gradually. Sensors monitored for the smallest pressure loss. Control rooms tracked every pump, valve, and flow rate in real time. Think of it like testing a newly built aircraft. Every engine may work perfectly on its own, but the aircraft is only ready to fly when every system performs together. After months of testing, the answer was clear. The pipeline was ready. When commercial operations officially began in 2012, the UAE quietly achieved something it had never possessed before. It now had two independent export routes. Oil could continue leaving through traditional Gulf terminals, or it could travel east across the country to Fujairah before entering the Gulf of Oman and the wider Indian Ocean. The project had delivered exactly what its planners wanted. Not more production, more flexibility. For several years, however, almost nobody paid attention. There were no dramatic headlines, no global celebrations. Oil continued flowing. Tankers continued sailing. The pipeline became one more piece of energy infrastructure hidden beneath the desert. To many observers, the multi-billion-dollar investment looked excessive. Then came 2019. Within a matter of months, the strategic environment surrounding Gulf energy changed dramatically. Commercial vessels were damaged off the coast of Fujairah. Not long afterward, coordinated drone and cruise missile attacks struck major Saudi oil facilities, temporarily removing millions of barrels per day from global production. Suddenly, something governments had long understood in theory became reality. Modern energy infrastructure could be targeted directly. The threat was no longer limited to naval blockades or conventional warfare. Commercial shipping, export terminals, processing facilities, pipelines. Everything had become part of the battlefield. Insurance costs increased. Shipping companies reassessed regional operations. Energy markets reacted almost immediately. Questions that once belonged only to military planners were now being asked inside boardrooms and trading floors. What happens if a key export route is interrupted? How quickly can another one take over? While uncertainty spread across the region, crude oil continued moving quietly from Habshan to Fujairah. The pipeline had not been built for one specific conflict. It had not been designed against one particular adversary. Instead, it had been built around a much broader principle. Never allow an entire national export system to depend on a single route. That decision, made years before the crisis, suddenly looked remarkably far-sighted. Almost overnight, the pipeline transformed from an engineering project into strategic infrastructure. But the story didn't end there. The attacks revealed another uncomfortable truth. Simply having an alternative route was no longer enough. The infrastructure itself had become a potential target. A pipeline designed to withstand corrosion, pressure, and extreme weather wasn't necessarily designed to withstand drones, missiles, or precision strikes. The nature of resilience had changed. Recognizing this, Abu Dhabi National Oil Company began expanding the Fujairah export system rather than treating the original project as complete. Plans advanced for a second parallel west to east pipeline capable of increasing total transport capacity to around 3.3 million barrels per day. Large sections of the new line would be buried several meters underground, not to hide it, to protect it. The engineering philosophy itself had evolved. Efficiency was no longer the only objective. Survivability had become just as important. Every additional meter underground increased protection. Every redundant system reduced vulnerability. Every expansion strengthened the country's ability to continue exporting oil, even under conditions that previous generations of engineers had rarely imagined. The Habshan-Fujairah pipeline was no longer simply moving crude across the UAE. It was redefining what energy security meant in the 21st century. And that transformation would soon attract the attention of countries facing exactly the same strategic dilemma, none more closely than China.